Like most commentators, we have a probability assessment of a Fed rate rise and equally a probability of a Fed rate staying exactly the same. I think right now it's about 50-50. It does tend to vary week by week. There's not sufficient data points in the near-term calendar to make a complete judgment on that. But be mindful that if we have a rate increase, then that's unprecedented in the last 8 years. So there's still a lot of uncertainty as to what's going to be the outcome.
OK, let's take what could be the worst case scenario. If we see a move in September and we see another move in December after the US election, could the markets over here in EM Asia especially absorb that, or is that going to be something that upsets the apple cart over here, Jim?
OK, I think we look at the EM community in two parts. We've got the North Asian markets like Korea and China. They're very tied to conditions in the US. So if the Fed is confident that US economic conditions are positive and it raises rates, that in theory means that economic activity in the US is high, which means it's good news for Korean exporters, for Chinese exporters, and also for Taiwan. Our preference actually is for markets which have got more control over their destiny. And for that reason, we are fairly optimistic on markets like Indonesia, the Philippines, and India, where internal growth, domestic consumption is much more a bigger component of GDP. And for that reason, we see the stock markets as being quite resilient to what happens in the US.